Hi, my name is Libby Newman and I'm an investment strategist here at Vanguard. Welcome to this month's market and economic update. Well, there's been plenty of news since our last update. The first few days of April saw a spike in market volatility as the 2nd of April US tariff announcements sparked a to and fro between the US and several of its key trading partners. We've updated our economic forecasts as a result. For US GDP for 2025, we now expect that to be less than 1%, and that's less than half of what we'd penciled in at the start of the year. Having brought inflation down closer to 2%, the Fed now has to contend with inflationary impacts of tariffs. Higher tariffs have materially impacted our outlook for inflation, which we think will get to 4% in 2025. Lastly, unemployment is expected to rise to about 5% by year end, again up from our previous estimate. This presents the US Federal Reserve with a potential challenge when it comes to interest rate policy. The Fed's congressional mandate is to ensure both price stability and maximum sustainable employment. We think that as long as the labour market remains relatively healthy, the Fed will remain focused on inflation. We have 2 rate cuts slated for 2025. The RBA held steady on rates at its 1st of April meeting, but we don't think that'll be the case in May. And given the weaker global growth and heightened uncertainty, we've brought forward our expectations of a 25 basis point rate cut. However, we think that limited room for lower inflation combined with labour market strength make it hard for the RBA to cut too aggressively. We see rates at around 3.5% by the end of 2025. Despite that tariff uncertainty, we maintain our outlook for full-year GDP growth in Australia at around 2%, with risks to lower growth. Though exports are a key driver of Australia's economy, our exports to the US account for less than 5% of the country's total. We expect policymakers in China to take steps to boost domestic demand, including through infrastructure investment, which would likely increase commodities demand from Australia. The last month has been a reminder of 3 key investment lessons. Firstly, the best and worst days in the market are often clustered, which makes timing difficult. For example, in the ASX 300, one of the 20 worst days since 2000 happened on the 7th of April. One of the 20 best days since 2000 happened on the 10th of April. Diversification is important. While the US market has had a rough start to 2025, Europe has done relatively well. Volatility is part and parcel of investing. It's important to zoom out and maintain your long-term perspective. Focus on things that you can control, which is the amount of risk that you take and the fees that you pay to capture those market returns. Click on the link to read on.